Hey, welcome everybody to the 40 Finance channel. Today we're going to be talking about semiconductor stocks, chip stocks, whatever you want to call them. And we're going to talk about them in terms of the 3X daily leveraged ETF, SOXL, as I call it, SOXL. And what's getting a lot of interest from some investors, particularly those who follow leveraged ETFs, if you think about where the chip sector is right now, it's just taking an absolute beating. Okay, so we're talking about NVIDIA. Off the top of my head, it's probably minus 75, 80% this year. And I talk about TQQQ quite a bit on this channel. So I thought I'd just pivot today. I do not own SOXL. However, it is really showing a lot of trading volume right now, and trading volume can be positive and negative, but you start to get the feeling, at least I do, as I read along from opinions from different analysts and investors, that this one's starting to attract some attention. In fact, I believe prior to today's run-up, we're here on Monday, the October 17th, we're having a big day in the stock market, at least through 2 o'clock. Prior to that, I think SOXL was in the $5 range last week on one of the low days. So that's what you're kind of getting is this, lottery ticket, so to speak, where if this thing goes down far enough, you have to ask yourself, risk reward, maybe it's worth a shot. At some point, you just have to ask yourself, if the price goes down to, below $5, what's it really hurt to throw a little bit of money in this thing and potentially see outside gains in the future. Okay, so jumping in, you see this is just a Google News search of semiconductor stocks. It's an arbitrary search term that I used, and you can kind of see how things have been rolling in terms of negativity. You've got, the Biden announcements on how he's locking down some semiconductors. And you've also had earnings reports come out from some of the big dogs that are already saying, at least with AMD and stuff, they're already saying, hey, listen, next quarter, the next couple quarters are not going to be great. So they've already tempered expectations heading into the first couple or the next couple earnings. So you have a lot of weight holding the semiconductor space down right now. And yet on the same token, I think most of us believe, certainly technology people, technology enthusiasts believe that it's hard to imagine a world without semiconductors. It's hard to imagine a world that we don't incrementally need more semiconductors every year for infinity when you start taking into account where all these chips are placed in nowadays, right? It's like, frankly, you probably have a chip in your coffee mug at this point, right? But the question is, of course, the short term, where do we go? How far down could we possibly go from where we already are today? And you see how when we scroll down to the bottom of this search, you get your first article here mentioning SOXL as, a potential place to get into if you believe this is the bottom for semiconductors. So let's take a look here. Switching over here to Seeking Alpha, at what exactly you get with this Direxion Daily Semiconductor 3X Bull Shares ETF. All right, quick pause here before we jump in. I want to let you know that Seeking Alpha Premium Special Sale that I've been talking about is still going on. You can still get 12 months of access to the premium service for only $99. It also includes a 7-day free trial on the front end. So you have to put in your credit card, but you do not get charged until the 7th day. Just cancel by the 6th day. That's what I would do if I was nervous about getting charged. But Seeking Alpha, use it all the time on this channel. You've seen me promote it for just as long. And my affiliate link is in the description if you're interested in supporting my channel and taking advantage of this special sale. And Seeking Alpha is just a real easy one for me to promote because I use it all the time. I love the service. I got tons of video reviews if you want to look through it. But honestly, at $99, which whatever, less than 10 bucks a month, I just can't imagine that you are not going to get a return on your investment for that particular price. All right, so here we are at SOXL today, year to date, minus 90%. Similar story to what you've seen with so many growth stocks, not to mention TQQQ, I talk about all the time, but this one was $72 at the first trading day in January. And obviously you're down to $7 here today. If we go through a let's go for a 10-year view first. And if you held this for 10 years, a lot of people would debate if that makes a lot of sense or not, but we'll just pretend you held one share for 10 years. You'd be up plus 1,800%. That goes down, though, significantly if you bring it down to a 5-year chart. Okay, so the one thing about semiconductors, as it pertains to TQQQ, that I invest in, is semiconductors are extremely volatile. They're always about up cycles, upgrade cycles, new technologies, etc. I think for this particular bear market or downturn that we're seeing right now, it's just a combination, right? We pulled forward a lot of demand, and then on top of that, we have legislation problems, and we also have competition issues with China and where that relationship between US and China might go. So it is a very dark sky in the semiconductor space. What you're banking on, as I mentioned earlier, is that the future of this industry continues to go up. Now, when we look at the holdings, you're going to have a bunch of wacky stuff in here because it is a leveraged ETF, but the thing that I want to call out is right here, Texas Instruments, Broadcom, NVIDIA, Qualcomm, and I'm going to compare that to the regular SOXX, SOXX, which is the iShares Semiconductor ETF. And then the reason I'm doing this is just to give you an idea of how they compare. And you can see on the top ones, Texas Instruments, Broadcom, NVIDIA, Qualcomm, AMD, Microchip, on semiconductor, so on and so forth. These top 10 holdings account for 56% of SOXX. Okay, so we're basically looking at the same stocks, because the next thing I'm going to do as we think about SOXL, we're going to look at these stocks individually, or actually we're going to compare them. As I've put together this comparison on Seeking Alpha, this is a stock comparison you can do if you're a premium subscriber. And the names I put on here, AVGO, Texas Instruments, Qualcomm, AMD, NVIDIA, and Microchip Technology. Okay, so they're not necessarily apples to apples in the same things that they produce, but what I'm doing here is I'm putting 6 of the top 10 holdings together, and then we're going to think about the future. We'll also get a peek at the long-term forecasts as well and try to figure out, does SOXL make sense as a play, as a risk play, maybe at a small percentage of your portfolio going forward. So let's just do that right now. And if we start off with Seeking Alpha ratings, you've got the 3 different types. You've got their quant rating, which is their algorithmic scale, SA authors, basically financial advisors and people like me who write articles for the site and put buy, sell, hold on everything they write about. And then Wall Street analysts. If you look across, you've got no sells. That's the thing that kind of stands out. Now, you have some holds here, certainly on the quant formula, but as far as sell, get out now, there really isn't too many, and not seeing any sells is very interesting peak. So I would say, generally speaking, this is all a positive right here. Quant rankings, we're going to skip over that and get down here to total returns, just to see how we would have done in these stocks over the past, let's call it, 1 year versus 3 versus 5. So Broadcom, minus 12% on the 1 year, minus 34 year to date. 3-year investment, though, plus 67. All right. Texas Instruments, year to date, minus 19, 1 year, minus 20. 3 year is positive, 5 year is positive. Qualcomm, minus 40% this year. Minus 13% over a 1-year stretch. 3 years positive, 5 years positive. You kind of see where this is going. AMD is it the top loser on year to date? Well, it's pretty much tied with NVIDIA. It is the top loser of these stocks over the past 1 year by a couple percentages. But once again, and let's just skip to the end here, when you look at 3-year returns for these particular chip stock leaders, and you even look at 5-year returns, these stocks have performed very, very well. So if you fell asleep, let's say at the beginning of 2020, and you just now woke up, obviously you missed a huge roller coaster, but if you invested 5 years ago, you're still in pretty good shape despite all the meltdown. So for me, and thinking about how that pertains to the future, a future where I believe semiconductors will continue to be important, and they will definitely have some down cycles, perhaps like we're seeing now, but I expect them to have up cycles as well. And I think that that is proven out pretty well in the 3 and 5 year returns on the stocks we have here. I'm more concerned about this table though. So we want to see a fair valuation, but we also want to make sure that we have an eye on growth, because if you're not growing revenue or profits, then your stock is effectively stuck, right? Because the denominators are not changing. It's not adding more EPS. It's not adding more revenue. So the price is just sort of middling in the middle. All right, so revenue growth year over year. This is for our 6. Across the board, they're all positive. AMD, as a matter of fact, 61% revenue growth year over year. Now, forward revenue growth, it is less. Are all of these less? Let me double check. All of them except for Qualcomm, basically. They're coming in less, but what do you see? You see double-digit revenue growth projected. So these are not dying companies, right? These are companies that are still projected to grow their top line even in these difficult conditions. 3-year CAGR for revenue growth, we talked about 3-year returns. Only Texas Instruments and Microchip are under double digits for a 3-year CAGR, right? And then if you do a 5-year, you've got Texas Instruments is the only one there. So that looks pretty strong. And EPS growth, diluted EPS growth, looking ahead to next year, 20%, 20%, AMD 47%, Qualcomm 45%, Texas Instruments 14%, AVGO 22.3%. So that's very good EPS growth on the bottom line. Even if they don't hit these numbers, you're still talking about some padding in there that looks pretty promising, at least to me. All right, profitability, and this is where you see things really shine with the chip stocks as long as they keep getting orders. You know, gross profit margins across the board. Heck, AMD is the laggard of this group at plus 50%. It's a pretty good business to be in if you can pull it off. All right, EPS revisions. This is where things start to become important and you start to see why we are dipping the way we are. So, fiscal quarter 1 up revisions. This is for the upcoming quarter, okay, that we're about to get our earnings reports on, right? Just here in the next week or 2 or 3, depending on when their reporting day is. AVGO, 16 EPS up revisions, 8 down. All right, revenue, 15 up, 6 down. These are revisions that have come throughout the quarter as more news has come on. Texas Instruments, 9 up on EPS, 18 up on revenue. Qualcomm, that one's leaning much more to down. 17 down on EPS versus 9 up. 17 down on revenue versus 6 up. Now next we have AMD and NVIDIA, and they're both in about the same camp, right? 35 and 26 people have lowered their EPS estimates for AMD and NVIDIA respectively. And then if you go down to revenue, it's pretty much the same story. In fact, on AMD, you only have one analyst who is raising the revenue forecast and the EPS forecast. So that gives you a look at how things are changing for these two. But you throw in Microchip here at the end, and they're 19 up for EPS, and revenue 19 up for that one as well. So we've got three here in the middle where they're kind of projecting down, right? But we're not talking about negative. We're just talking about less money than was originally forecast. So it's not as woeful as it sounds, but it's a mixed bag. So you have three down, and then you have three chip stocks here in this SOXL related group that are actually projected to go up. So I would say I don't see an overwhelming negative here. All you're really doing when it comes to AMD and NVIDIA is you're probably lowering the multiple, which we've already seen. All right, we took 6 of the biggest stocks in the semiconductor index as they relate to SOXL and SOXX. So where do I really stand on SOXL right now? This is not one that I hold, and I have to say that I would still be more inclined to buy TQQQ over this one. If there's one thing that I think is a key difference between these two is these are holdings in the QQQ. All the stocks we reviewed today that were in SOXL, I believe all of them are in the QQQ. The bottom line is it's hard to ignore that I already have that exposure that I would get by adding SOXL, right? So you've got Broadcom, you got Qualcomm. This is just like the top 25 holdings in the Qs that I put together here in Seeking Alpha. But you got AMD, you've got NVIDIA, Intel, and of course there's some of the other ones in the top 100 just buried down at lower levels. So if it were me, any money that I would buy on SOXL, I would probably just go ahead and buy TQQQ instead. All right, guys, so that's my look at a few of the top chip stocks as they pertain to SOXL. Let me know if you're buying SOXL or TQQQ. I get a lot of excitement every time I do one of these leveraged ETF videos. They are fun to do. As always, though, make sure that you're managing your risk and only gamble with the money that you can afford to lose. All right, thanks for watching. Hope everybody's doing well. We'll see you on the next video.